afternoon. My name's John Levine. I'm the Chief Experience Officer at Clear Street. There'll be a class later on what a Chief Experience Officer actually does. Anyway, this next session brings us a conversation at the intersection of private capital, global sports, and long-term value creation. Todd Boehly is the co-founder, chairman, and chief executive of Eldridge Industries, a diversified investment holding company that builds and supports businesses across asset management, insurance, sports and entertainment, media, real estate, technology, and other strategic sectors. He also serves as chairman of Eldridge, the firm's asset management and insurance holding company with more than $70 billion in assets under management. Todd is widely recognized for his ownership stakes in several prominent sports franchises, including Chelsea Football Club, just for the record, my team, the Los Angeles Dodgers, the Los Angeles Lakers, among other, bringing a unique perspective on how capital, brands, and culture converge in global sports. Today's discussion will reflect on Eldridge's year-in review, how to navigate risk and opportunities in today's credit markets, investing in sports and media, and capitalizing on the growing demand for defense technology. The conversation will be led by Jen Prosek, founder and managing partner of Prosek Partners. With that, Todd and Jen, I welcome you both to the stage.
Glad to be here 1 year from last year. I sat on the same stage with Todd Boehly, one of the most interesting investors in the world. And it was right before the launch of his asset manager called Eldridge Capital Markets.
Management.
I always get that wrong. So thank you for that catch. So you're about a $75 billion manager now. Tell us a little bit about what's happened in the last year before, since the launch.
Well, it's great to be back, and it's great to be back with you. We had a good year. We got our diversified credit fund done, almost $1 billion for a first-time fund. So now we don't have to continue to talk about being a first-time fund.
Nice.
We've got our liquidity solutions product for general partners. So we closed on over $500 million of that. We did 8 or 9 securitizations with our equipment finance platform. We started it was called Stonebriar. We're probably the #1 independent equipment finance group in the U.S. now. So we've done, I think, 9 or 10 transactions securitizing those assets. We've got our sports and entertainment product up and running. We had a couple big events in the portfolio. A24 had their first $200 million movie with Marty Supreme.
Congratulations.
So that worked
Who
out
saw
well.
Marty Supreme?
Yes.
Yeah.
Triple Dot did a very big acquisition. So we're really excited about the portfolio that we've been able to put together, across all those products. And we're continuing to think about how to redefine what asset management is going forward. We really believe that combining technical capabilities with structuring and deal capabilities, we think, is where the world's headed.
All right, big year. Your roots are as a credit investor, so I'd love to talk about your credit portfolio. Obviously, credit is in the news. Some people think it's risky. I'd love to hear a little bit about how your edge in credit, and I definitely want to unpack equipment financing after you describe it.
We've been in the credit business for 25 years, and I think the top of the capital structure business is one that is a day in and day out business. I think the high yield bond business is kind of 2 out of every 5-year business. But when you sit at the top of the capital structure, if you go back to 2014 and you look at the 10-year holding period from 2014 to 2024, and you ask yourself really simple questions like, what was the cumulative rate of return in an equal weight U.S. Treasury portfolio? What was the cumulative rate of return of an investment grade bond portfolio according to Bloomberg's investment grade index? What was the rate of return of used to be the Credit Suisse, now the UBS high yield bond index? What was the rate of return of the senior secured Credit Suisse loan index, now the UBS loan index? And then JP Morgan BBB CLO index. And you go through that, and the cumulative rate of return for 10 years for equal weight US Treasuries was less than 9% cumulative.
Okay.
Right? So when you think about 10 years making less than 9% cumulative, obviously there was a lot of erosion because rates moved up dramatically. You had the investment grade index in Bloomberg was right around 28%, so sub 3% a year. You had the high yield bond index, so those three are all kind of fixed rate instruments that are loaded with interest rate risk when the 10 years at 2%. They did 65%.
Okay.
But if you go to you move up into the capital structure and you go for senior secured loans, you are sitting at basically 68%. So no interest rate risk, senior secured, senior to the high yield bonds, generally, and you're going to get a couple hundred basis points over that 10-year holding period. And then the JP Morgan BBB CLO index, was 88%. So that's basically buying senior secured loans with equity capital beneath you. So from my perspective, I think that being the senior secured lender, is a good business year in and year out. Now, what happens is, things get heated up, pricing starts to change, and then you can't move pricing anymore because it doesn't work for the math of the CLO machine that acquires the loans, and you then have, basically a scenario where banks start competing on covenants and documents. So, we're going through a world right now where lender-on-lender violence is a thing.
Yeah.
Liability maintenance exercises are a thing. And, the key is to figure out how to stay as part of the group that is putting the transaction together. And I don't think you're going to see that same type of lender-on-lender violence in the what we're calling the private credit markets. Even though broadly syndicated loans are private, but they have public prices. So.
Right.
But that's going on in the broadly syndicated loan market, and a lot of it goes back to the fact that the investment banks who are sourcing this stuff don't own any of the risk, right? So what they're really doing is in the moving business, not in the storage business. And when you're in the moving business, your perspective on what you care about is very different when you're in the storage business. So I think we've seen these cycles go up and down over long periods of time. And in the end, you just have to make sure that the attachment point of where you're lending to is worth more than the value of the business. And whether that's, real estate finance against a building, or it's the senior secured debt. And then, of course, what you're doing is just playing probabilities on what's the likely rate of return relative to the likelihood of losing money. And as long as you're set up against the odds that you feel good about because you like the bet you made, where you'd be happy to own the business or the building at the attachment point of the leverage, then ultimately you'll figure out how to have one or two more bites at the apple and try to figure out, can you work it out if you get in trouble?
So you touched on equipment finance and your leadership position there. Why are you so bullish on equipment finance right now?
Equipment finance, well, there's a massive industrialization going on, but we've been doing it for 10 years. But equipment finance, right, one of the things that got us there was because when we were working through workouts, right, and the equipment finance is usually attached to the mission critical assets that make the business go. So if the business is still a going concern, then they're going to have to restate you. So we've had, over the last 10 years, we've probably had 50 defaults. But on average, we've recovered over 102 cents on the dollar.
Wow.
So, really your bet in equipment finance land is that, the business, one, will reorganize if its balance sheet gets out of whack. It will reorganize as a going concern, and you won't have a Chapter 7 liquidation. And then, of course, if you do have a Chapter 7 liquidation, which we've never had, you also then have, equipment that can be repurposed for lots of different things. So, but usually that equipment is the beating heart of the business.
Yeah.
Right? So whether it's compressors in a natural gas compression system, or it's planes in a private aviation setting, or a commercial aviation setting, or it's barges, or it's tanks, or whatever it is, right? Usually that equipment is the most important element. And one of the things that's really exciting is the big beautiful bill is now really accelerating the industrialization, so more and more equipment finance. And as we go to market and we look at custom solutions for businesses, we're looking at, how much holding company debt should they have, how much mezzanine debt should they have, how much equipment finance they have, and we can put together, a capital structure taking advantage of all the elements of a business.
So you're actually seeing the sort of reindustrialization or manufacturing coming back to the U.S. as part of this equipment finance trend that you're betting on?
It's absolutely back.
That's cool.
And I think we're seeing it now with a government that is really about action. So I think we're seeing these pools of capital now that are really there. You've got the Office of Strategic Capital under the Department of War now, which is a plus $200 billion fund that is focused on 45 different industries. And it was given birth under the Biden administration, and now they're really putting it to work. And I think that's going to be a real driver of defense industrialization growth. And then you have the DFC, which just got another $205 billion allocated to it. So, right, and their whole mandate is to think about how do we finance things that we want in our country, like minerals or reserves or whatever it is.
We're going to get to defense and minerals, which will be a super interesting conversation. But first, I want to get to sports. What does an elite credit investor, what's the link to sports? Where is the link to sports? And how are investors accessing sports through Eldridge?
Well, again, I think that lending money and making investments, for me, we're just really tracking dollars, right? And how do dollars move around, and how do business models work? And obviously, the sports world is one where, in the U.S. in particular, there is a finite number of them, and they're not going to be making many more of them. And you have these revenue funnels that sit up at the top of the league. I mean, I think the NFL is, to me, worth more than Netflix. But Netflix trades, $400 billion as much as $500 billion. But I'd rather own the NFL than I'd rather own Netflix, because they're just going to keep pumping, intellectual property into a system, and it's going to keep getting bigger and bigger. And there's going to be more and more ways to interact with these, because when you have a giant built-in audience, that is your fans, you're just trying to figure out, how do I keep giving them more? How do I give them more?
I mean, you've made huge bets. I mean, Dodgers, Lakers, Chelsea, some of them were not inexpensive bets. In fact, we were just talking about how Chelsea started in a place where you were highly criticized and is really looking like a pretty damn good investment at this point.
Listen, I think, you recognize that the fans demand urgency.
Yes.
And plans also oftentimes don't allow for urgency.
Yeah.
Right? Plans are things that are crafted, executed, put in place. And if you look at the Dodgers, it took a couple years for us to really get the culture right, the team right, all these elements that have to come together. Because obviously you're talking about 5% odds of winning the Premier League if everything was equal. Right? And the Dodgers right now, they're probably, if you went to Vegas, I'd tell you, they'd say that you're kind of like maybe 1 in 3, 30% odds of winning. So still, that means you have a 70% chance of losing.
Yeah.
And I think that all these things are, really, for me, investing is really just about odds.
Yeah.
Right? And probabilities. And what are your odds that things go well? What are your odds that things go wrong? And how do you use capital structure to nest against the downside, right? Because as a credit investor starting, right, you went through a lot of brain damage, but as long as you got your money back, you just felt fine.
Yeah.
Right? So to me, when you look at these kind of capital structures and you think about how do you want to set up against it, or what's the risk return profile you're looking to build, or in sports teams, you look at them and you say, they're uncorrelated. They're not making more of them.
Yeah.
They are growing in demand globally, right? Distribution systems have come down at price in such a way that, you've got global fans of every big sport.
Yeah.
And I would bet the NBA is going to be the first real global sport, right? Because you need 5 guys, a ball, and a hoop. And so when you think about like what that means, you've already got NBA Africa. They're going to figure out how to build infrastructure, because Africa's issue is it has no infrastructure. So the NBA Africa teams turn over. They're not the same teams. They're not attached to infrastructure. They're headed to Europe. They've made it clear they're headed to Europe. And obviously, they're dominant in the U.S. And what they have in Europe is they're going to allow sovereign wealth funds to own the European teams. But as this thing converges and as the sport gets more global, it's pretty easy to see on the horizon, 20 years out, one big NBA. Right? And so I think that's pretty exciting. I think the NBA is uniquely positioned to do that. Football, there's so much history to football. So to think that way, I think, is really challenging. I think that American football is too expensive, too many pieces of equipment, too hard to get teams up and running. And baseball is growing, but just doesn't have the demand basketball has around the world. So I think you're going to see more and more demand, more and more focus, more and more fans, more and more engagement with the athletes thinking more and more about how to take that built-in marketing asset that is their fan base and doing more with it.
So how do you balance, you said the fans have urgency, right? But as a businessman and an investor, you have to make bets that take a little bit longer to play out. I mean, in a situation like Chelsea, how did you handle the early criticism for the fans and balance that with what you needed to do to get where you needed to get?
I've been married 30 years.
Good answer.
So
marriage is harder, eh?
Super demanding,
Yes.
and wants it emergently. So, the reality of it is that you have a plan and you stick to it. And when you get new information, you pivot and you adjust. And you're not shameful about adjusting with new information, but you can't flip-flop.
Yeah.
Right? You can't be like, left hand, right hand, and trying to build something that really is about, execution over long periods of time and building an infrastructure and a foundation that you can just continue to work with. And I think finding those right elements, the first time at anything is tricky. So you're going to make mistakes.
Yeah.
And obviously having taken over in the circumstances we did, basically the whole management team left.
Yeah.
Right. So I was stuck being interim sporting director for a summer, having no idea what made a good football player.
Yeah. Right.
But knowing that Mark Cucurella, if Man City wants him, I want him.
Yeah. Right.
It was really simple that way.
That's pretty simple. Yes.
Yes.
All right. So let's pivot into, a topic that seems like it's not related: minerals and defense, but minerals. You made a big investment in an Australian company that has led you to, I think, a lot of other things. Tell everybody about how you're thinking about.
Yeah, so a couple years ago, we started coming to the view that the mineral space was going to get really interesting. And we then went out and made a big investment in a 40-year-old, 1991, so whatever that is, 37 years old.
It's been around for a while.
Yeah, engineering business, and they control 4,000 engineers that work in over 100 countries. They're the ones who do the feasibility studies. Then they figure out, once the feasibility studies are done, how do you do the layout of the mine? How do you get water there? How do you get power there? How do you get the stuff processed so you can effectively move it or economically move it back to a refinery? So for us, like the whole reason I liked the credit business originally was because I thought I could kind of date from the sidelines, right? You make a loan, you're not all in, you're not the partner, but you have a front row seat to everything that goes on.
Totally.
And if it's not going great, you get paid off. So we dated through the debt is what we called it. And for me,
dated through the debt.
Dated through the
like
debt.
That. Okay.
And then when we looked at this Australian engineering company, we thought, okay, this is a great way on a kind of asset-light basis with a human capital business. And by the way, America's right now only graduating 160 mining engineers a year. Mm-hmm. So all of a sudden there's this giant air pocket in the world because everyone stopped thinking about minerals as being important. And now all that anyone can talk about is minerals being important because they're so important for aerospace, they're so important for defense, they're so important for space.
Yeah.
So all the elements of what people are thinking about today are based on the critical minerals that allow those things to be achieved. So we made this investment, and it gave us this great front row seat to all this human capital that has been educating us. And as you look around the world right now, like the Campbell School of Mine, famous mine school in the UK, for some 5, 6, I can't remember the number of years, they didn't graduate any mining engineers in their Campbell School of Mines. So there's this massive air pocket in kind of human capital and capability. So our job was to go out and figure out how do we get set up with that.
Yep.
So then we can have real conversations now. And our EBITDA's doubled, and now we're sitting here looking at it saying, okay, how do I turn this into an asset management business? Because I've got all the capabilities on the technical side, and I also have the deal structuring expertise. So how do I marry these two things? At the same time, I know the US government is willing to do offtake. So I just look at it and say, okay, we've got a giant structured finance trade.
Wow.
Right? I've got a buyer, I've got a known kind of a group of technical capabilities, I've got a deal structure, and now I just need to make sure I can get the mineral at the right cost. And there's still a lot of brownfields out there, so you're not making bets as to whether or not the minerals are there.
It's fascinating. And how does that link into how you're thinking about defense and defense tech?
I think minerals are part of defense, but we've also been really active at figuring out what's going on in this kind of prime supplier channel, right? You've got 8 tiers of suppliers to the U.S. government. You've got the primes that frankly are under pressure to move faster, but for their own issues, right? Because the government used to say, I want 10 of these one year, and then 50 one year, and then 90 one year. So it's hard to manage your business without more certainty. So I understand what their challenges are, but at the same time, these reindustrialization of the defense space and the wake up of Europe, right? We're watching all this happen in real time. And I think we're in a world where you're thinking about peace through superior firepower.
Yeah.
And I think the reality is so much of what we're seeing going on right now is just some giant mark to market of what happened after World War II, right? When basically Europe was told to disarm, America said, "We got your back," and America continues to spend on defense, continues to stay cutting edge. Europe's really stopped that, started funding social programs, and now they have to figure out how to get out of that cycle. And Germany's, their best bet to lead the way. But all of this money is coming into defense. Cyber is going to become really important, right? Space. I think all these areas are going to be very fertile places to be investing.
So I learned something I hadn't heard of before about the middle corridor. Tell everyone what the middle corridor is and how it fits into what you're doing.
Well, the middle corridor is what I think will be, the Suez Canal equivalent over the next couple of decades, right? So if you look at the middle corridor, it's really the C5, which is Kazakhstan, Uzbekistan, all these stans, have massive resources. Those resources need to be funneled into Turkey, Syria, Europe, and beyond. And the way they're going to go through is really through the Caspian Sea. Because if you go north, you're going through Russia. You go south, you're going through Iran. So this middle corridor now is being set up, to be a thoroughfare of minerals, energy, gas, data. They're going to be layering subsea cable lines there. I mean, I think it's going to be a huge opportunity. So spending a lot of time in Baku has been something that I've enjoyed a lot. As my kids have all graduated, it's given me a lot of freedom to be able to move around. And of course, you really learn things when you're face to face with people. That's it.
That's so fascinating. So how does this all knit together? If somebody said, how does this all knit together, Todd? Sports, mining, defense tech, credit.
It's what we've always said. We want to be invested in what people want and what people need. Yeah. And I think if you just constantly are looking it through the lens of what do people really want, right? They really want sports. They really want experiences. Obviously, we're the largest shareholder of FlexJet. We're the largest shareholder of Amman, right? So we've got these massive mobility and luxury brands that I think are extremely well positioned. Our FlexJet business is, we've now exclusive with Gulfstream if you want a G700, basically, we're here to chat.
If anyone wants one, let me know.
And I think Amman is the #1 luxury experience in the world. That's a theme of what people want. And then what do people need? Well, we need security.
Yeah.
We're the largest parking lot operator in the US. We own 2 million parking spots now. And I'm ripping out all of the gates and the tickets and the payments, and you drive in and drive out.
People
and
want
saves
that.
You time, right?
Yeah,
Saves you
totally.
time, right? But that technology that we're using, now we want to apply it to private clubs and hospitality. And, because I think if you think about like the battle that's going on inside people's brains, right? They want convenience, they want security, right? And they want privacy.
Yeah.
The problem is those three things don't coexist.
Right.
Right? If you want convenience, you're going to give up privacy.
Yeah.
Right? And I think security and convenience are going to trump privacy, because the reality is most people don't appreciate how much you're emitting as you walk around with a phone.
Right.
There's really no such thing as privacy. Right? If someone really wants to track you, it's really just not that hard.
So we're here in Miami, Florida. People want Miami, Florida. You've got some projects down here. You built an office building that's pretty full down the block, and then I think you're developing the Delano. Tell everybody, since we're sitting here in Miami.
Miami's been great to us. 830 Brickell, that's the office tower that we built, and it's probably the first Class A office tower that's been built here in a long time.
Kind of went like hotcakes, and expensive.
I think it's renting out better than New York.
Yeah.
And we built the Una, the tower, the residential tower, down at the base of Brickell. We've got some Palm Beach projects going on, and then in a couple of weeks we'll be reopening the Delano.
How exciting is that?
It's magic. I think we're super excited. I think the demand for the product is very strong. I think we'll have a really cool club. We'll have a really cool setup out back, and there will be elements that make you think of the old Delano, but it will be all refreshed. And I think the Delano got a little bit old in the tooth.
Definitely. I'm excited. That was like my generation. It was cool, so I can't wait to go back. So I love to end my interviews with something a little personal. You mentioned you're an empty nester now. You can get around a little bit more. What are you doing a little bit more of these days?
I think about it as free birding, not empty nesting.
Okay, I love free birding.
It's really depressing sounding.
I'm going to be one next year, so I'm going to be free birding with you.
My wife and I are free birding, and I think we've just been traveling around a lot, seeing the world. Did 2 months in the Middle East. Did 15 days in Baku. Did a bunch of days in Europe, and bounced around America quite a bit, and really got the pulse of kind of what's going on out there. And I think that's been just a real fun experience.
Yeah, what a gift. You're going to make me look forward to free birding now.
Yes.
All right, last question for you. I always call it check this out. I love to ask, what are you reading, listening to? What are you obsessed with? What should the audience check out? An app, a show, a book, whatever you want.
I'm just bullish on everything A24. We've
Of
got
course.
Marty Supreme came out. We've got a bunch of new stuff coming out. We've got a new Beef coming out this year. Beef, if you haven't seen it, was one of the greatest Netflix hits.
I actually did not see Beef,
and
so I got to watch it.
So we've got a new Beef. And
Okay,
the good thing
new
about
Beef.
beef is there's global beefs, so we're never going to run out of beefs.
Okay, great.
So we're excited about the new one that's coming out. And just generally, everything A24 has been doing. Obviously, the Globes, getting the Globes back alive
You
was
hit a home run there.
It was a big trick, and a lot of scars. And then, right now I'm enjoying Shrinking, the new Apple show,
Okay.
the third season.
Well, you heard it here, people. More beef, global beef. Okay, thank you, Todd Boehly. What a great
you.
conversation. Thanks, everyone, for coming.